Okay, let me add all of them. I think I will take few minutes. I think not more than 1 or 2 minutes. Okay, all right. Students are still coming in. I will not take more than 2 minutes, and then I'll start the lesson, because those who would be interested in joining, they will join it within 2 minutes of time. Okay, all right. Let's now start, because I'll see whether more students will join the class or not. But I think we need to start now, because those who are interested, they have already joined the class. All right. So we were talking about internal sources of finance. So retained profit is one of the source. So business can use it for the expansion of the business to meet its capital expenditure. Okay. So if business wants to expand, let's say, or to buy another machinery or equipment, so business can use retained profit for that as well. Or for example, if another building requires is required by the business, so this option can be availed. But I'll discuss the advantage and disadvantage of it as well at the same time. Retained profit is actually the profit which is kept by the business after paying taxes and dividends. Now, what does it mean? It means when profit is earned by the business, first of all, businesses have to pay taxes, and after that, they have to pay uh, share of profit to its owners, and we call them shareholders. And after paying um, the share of profit to the shareholders, that is what we call dividend, the left amount is called retained profit. Okay, so that amount might not be sufficient to finance capital expenditure, because obviously you have to pay taxes from it as well, and then you have to pay the share of profit to the shareholders as well. So maybe in the end, the amount which is left, it might not be sufficient to go for a large expenditure such as a capital expenditure. So retained profit might not be suitable for a large expenditure such as buying a new building. That is one issue there. But there is an advantage as well. What is the advantage? It is quickly available. So for example, if you require it in emergency, you can use it. It is readily available. It is lying there in the company's bank account, right? You know that. And secondly, the thing is, retained profit, you do not need to pay it back because it's business own money. And this is actually the advantage of all internal sources of finance. Okay, second is, if you see it, sale of fixed assets or non-current assets. I told you earlier what are non-current assets, which are kept by the business for more than 1 year, and why they are kept. Okay, who is doing it? This mess. Hmm? All right. Okay, so non-current assets are there, right? So it means that now um, a business can sell those assets which are not in use, and you feel that, for example, machinery is there, okay, or maybe one factory is not being used, so you can sell them off to get a reasonable amount of finance, and you feel that maybe in near future they are not going to be used or they are not going to be demanded. Chanze, don't do it. Chanze Faryal, you are actually disturbing the screen. All right. So Chanze, what are you doing? Are you playing with the screen?
वो सर मुझे लगा ऐसे ही नज़र आ रहा था, मैंने कहा कुछ देखूँ ड्रॉ करूँ, मुझे नहीं पता था आपकी स्क्रीन
Okay.
भी इफ़ेक्ट हो रही है।
All right. So yeah. Okay. Now, okay. But whoever does it, I mean, people can come to know who is doing it. Okay. So non-current assets. Now, what is the advantage? Advantage is that a reasonable amount of money can be raised, because obviously non-current assets, they can be of high value as well. So you can go for meeting your capital expenditure, because the amount of capital expenditure is normally large, you know that. Okay. This is an advantage, right? But there is a disadvantage as well. Let's say once you sell off your, let's say, one of the machinery or one of the equipment, and then you realize the demand has increased and now you are in need of that equipment. Now you cannot use it because it's no more there. You have already sold it. So then you have to buy it again. And to buy a new one, obviously this will be more expensive, right? So that could be one of the disadvantage as well for the business. So business needs to be very careful about it. Then we have sale of stock. Again, if you have, let's say, too much raw material available in your warehouse, and you feel that it's not going to be used in the near future, demand is not that much, so sell them off so that you can get the money, and you can use it for meeting your expenses. And normally, the expenses you can meet with it are uh, revenue expenditures, right? Now, what is the advantage? Advantage is that now the cash which was tied up in the stock, right? The cash which was tied up in the form of stock and you were not using it, now that amount of cash can be used for a better purpose, like for example to buy an equipment. Okay, this is one of the advantage. The cash can be used in a better way. The disadvantage could be of the sale of stock is that yes, if you do not predict demand well and demand increases after that time when you sell off the stock, then you will be in trouble. Why? Because then you may not have enough stock to meet the demand of the customers, okay, who have approached you to buy goods, okay. And or if you actually request your supplier to deliver it quickly, obviously the supplier will charge more. Why? Because you want the raw material in a quick time. For that, again, it will be expensive for the business to buy, or they have to refuse the customers otherwise. Personal savings, again, this is an option available to businesses, but this option is only available to sole trader and partnership. Do remember. Why? Because they are unincorporated businesses, and that means owner and business are the same. So if business is in financial crisis, owner will help business out by using his or her own savings. Now, personal savings means obviously the amount which is kept by the owner for his or her personal use, right? But now that money can also be used to support business activities or to meet business expenses, right? But in case of sole trader and partnership, because here business and owner are not separate. But when it comes to public limited company or private limited company, as we discussed earlier, because there is it's an incorporated business, so that's why this option is not available in case of limited companies, because shareholders will not bother to support business if business is in financial crisis. They'll say business has to deal on its own. We are not supposed to use our own money to meet business expenses, right? Because of the feature of incorporated business. So that is okay. Now, the advantage is it is quickly available to the business. Why? Because it is already there in the bank account of the owner, right? But the disadvantage is that one, it might be too little. Okay, it might be too little. Okay, because it is for the home use. And secondly, now the owner's saving is at stake as well. Apart from the money, which was invested by the business, now the owner's own money, for which was actually kept for personal use, it will also be at stake as well. Okay, so that is one of the disadvantage of it as well. Now, if I talk about external source of finance, so external means this the finance which can be raised by from outside the business, right? From the sources which business does not own. They are outside the business. So let's talk about it. One is bank overdraft. I explained you earlier, right? Bank overdraft is actually a facility, that facility that they can withdraw amount more than the amount which is there in the account. For example, if you have $10,000 in your account and the bank allows you, yes, Hamza, you have a question?
Yes, sir.
Yeah, please
So I wanted
go
to
ahead.
ask what is meant by lease back?
Yeah, lease back. Okay. Again, because you have asked this question, so I will answer it. But I think um, I I was about to explain it because later we need to discuss that as well. But okay, I'll explain now. Sale and lease back is okay. After explaining bank overdraft, I will come to that point. So now
Got it,
in a
sir.
bank, okay, in a bank, if you have $10,000 and bank allows you to withdraw $12,000 instead of 10,000. So it means that the $2,000, which is over and above than the amount which is there in your account, this is the overdraft facility, which is given by the bank to you because you are a loyal account holder of that bank, right? And you can get the money immediately. So that money can be used to meet the daily expenses of the business. Again, remember, the limit of bank overdraft is not much. Okay, that's why you cannot support or meet your capital expenditure because the amount required might be big. But yes, for revenue expenditure, which is rather more crucial, you can use that facility as well. Now, the advantage is it is quickly available, right? Okay, and the disadvantage is that you have to pay it back along with an interest rate. So it means that you will not pay 2,000 only to the bank. Okay, back. You have to pay more than 2,000 because you have to pay interest rate alongside it as well. So that actually increases the expense of the business as well. All right. Then we okay. Now let me talk about sale and lease back because Hamza Amin just asked about it, and actually it's not there in my slide now. Now sale and lease back is another option, and you can use that as well. Okay. Now what? How do you do it? Now, for example, I told you earlier that, for example, if you have an idle asset available, for example, a machine available, okay, idle, and you are not using it, you can, and so you can sell it off, right? Because you feel that that machinery is not going to be used in the near future, let's say in 1 year's time. So it's better to sell that machinery, get the money, and use it somewhere else. And you can buy the machinery next year when you will require it. This is an easy way, right? But for example, if you do not have any idle asset available, like no extra machinery which is there, no furniture is there, or nothing of that sort is available which you can sell it off because it is idle. So what do? You actually sell off your machinery which is in use, the equipment which is in use, you sell it off. Now there is a question, sir, if you sell it off, how can you continue production? Now the thing is, when you sell your machine off or equipment off, you get it back through leasing. What do? Let's say you sell it to a shop, your equipment, right? You get the money, the whole amount. Okay, now what do? You get the same equipment on lease. Okay, and leasing is where you do not have to pay the whole amount. Okay, you have to pay the amount in installments. Okay, and you keep on paying the installments, and then finally you can decide whether to buy that machinery or not. So what happens? On the spot, you get the whole money when you sell your equipment, and now you have to pay a very small amount in the form of installments on monthly basis for that equipment. But now you can use that equipment. So what does it mean? You might not need to take the machinery away from the building or the factory. It will remain there, but now you have the cash, and now you are paying the installments of the equipment because you have taken that equipment on rent. Because leasing is a concept about renting something or hiring something. Okay, now you do not own the machinery, that's right. Okay, you are not the owner now, but you can still use the machinery, and your production process will continue in the same way. But the what is actually the advantage? Now you have got a huge amount from the sale proceeds of the equipment, and you are just actually spending a very small amount in comparison to that in the form of installments. And why you are paying it? Because you are using the machinery. Hamza, have I given you the answer?
Sir, this is an example of internal source of finance.
Sale and lease. No, this is not an external. This is not an internal source. Why? Because once you sell it off, okay, you get the money. This is internal source. That's fine. But what about leasing when you're using it? This is an external source. So actually,
लेकिन सर जो
it's a
हमने
mix up. Yeah.
फाइनेंस रेज अप करना है वो तो हम अपनी मशीन सेल करके करेंगे ना, तो
Right.
उस
Okay.
लिहाज से अगर देखें तो फिर इंटरनल ही होगा.
मैं हमजा आपको बताता हूँ, वो आपने जो फाइनेंस रेज करके किया है वो तो इंटरनल है. अच्छा, अब उसमें लीजिंग में क्या होता है भला? लीजिंग में ये होता है कि जब आप वो इक्विपमेंट बाय करोगे वापस, तो वो उसको पे कौन कर रहा है? मैं आपको एक एग्जांपल देता हूँ छोटी सी लीजिंग की. व्हेन यू लेट्स से लीज अ कार फ्रॉम अ शोरूम, ओके, शोरूम नीड्स टू बी पेड द होल अमाउंट, रिमेंबर, एंड यू डू नॉट पे. तो शोरूम ओनर नहीं कहता कि जी मुझे इंस्टॉलमेंट में दे दें. यू कॉन्टैक्ट अ बैंक and bank pays the whole amount of the car to the showroom owner on your behalf. It means that now the showroom owner has got the full amount, but now you are responsible to pay the amount in installments to the bank. So don't you think that you have been financed by the bank in that regard? So similarly, when we talk about equipment, तो जो आपने लीज किया, तो इसका मतलब है कि आपके बिहाफ पे बैंक ने पे कर दिया उस इक्विपमेंट को, जहां जिस शॉप से आपने ली है इक्विपमेंट. तो अब
हाँ जी सर.
अब आपको बैंक को पे करना है, तो बैंक इज एन एक्सटर्नल सोर्स ऑफ फाइनेंस. हमजा, मीन गॉट इट?
यस सर.
All right. So okay, all right, I think that is the time. So we'll continue that in the next class. Thank you very much, and do attempt the worksheet.